Hey everyone, welcome back to the channel. Today we are tackling the single hottest topic in the market, the one that has rewritten the rules of investing for the past 2 years, artificial intelligence. And I know what so many of you are thinking because I see the comments. Just tell me to buy more Nvidia. Is Palantir going to $100? Is it too late to get in on the Magnificent Seven? Let's be perfectly clear. Nvidia and Palantir are phenomenal paradigm-shifting companies. We all know the story. Nvidia is the undisputed kingmaker, the one selling all the picks and shovels in the biggest gold rush since 1849. Their GPUs are the lifeblood of this revolution, and their CUDA software platform has built a moat so deep and wide it's practically unassailable. And Palantir, the enigmatic data ops platform, is embedding itself into the core of government and enterprise, with their new artificial intelligence platform, or AIP, poised to be the operating system for how large organizations deploy large language models. But as investors, our job isn't to be fans. Our job is to find alpha. Our job is to look at the board and ask, where is the next move? When a stock becomes the consensus, when every single analyst, your taxi driver, and your dentist all agree that it is a must-own stock, you have to ask yourself a hard question: where is the edge? At a multi-trillion-dollar valuation, is Nvidia priced not just for the next 5 years of growth, but for the next 50? The risk isn't that Nvidia fails. The risk is that it merely meets the colossal, heroic expectations already baked into its stock price, and the stock goes sideways for years while its earnings catch up. It becomes a valuation risk, not a business risk. Similarly with Palantir, it is an incredible piece of technology, but it has always been a show-me story, trading at an astronomical valuation relative to its current sales and free cash flow. It trades on a powerful narrative of future dominance. That's a fine bet to make, but it's a high stakes, high volatility one. That is why today I am doing something different. I am sharing the top 3 AI street ops that I am personally buying with new capital right now. And yes, as the title says, I am prioritizing allocating fresh cash to these names, even over adding to my core Nvidia or Palantir positions at these levels. This isn't about chasing hype. This is about finding specific, sustainable, and in my view, potentially mispriced vectors of the AI revolution. We are looking for AI plus companies with a massive, dominant existing business where AI is the accelerant that unlocks the next curve of growth. Let's get straight into it. My first pick is a company that many people mistakenly think of as a boring semiconductor giant or perhaps a value play. I am talking about Broadcom, ticker AVGO. Now, most people know Broadcom for one of two things. First, its wireless components. They are a critical supplier for Apple's iPhone, making the best in-class Wi-Fi and Bluetooth chips. Second, its aggressive private equity style software division, where it buys up legacy enterprise software companies like CA Technologies, Symantec, and most recently, the massive $69 billion acquisition of VMware. This is a cash flow generating machine. But here is the trillion-dollar secret that is hiding in plain sight. Broadcom is, in my opinion, the second most important AI chip company on the planet, and it's doing it completely differently than Nvidia how, not with GPUs, with ASICs applications, specific integrated circuits. Think of it this way. Nvidia's GPUs, like the H100 or B200, are general purpose processors. They are the Swiss Army knives of AI. You can throw almost any kind of machine learning workload at them and they will crush it. This is perfect for the vast majority of companies who are just starting to build and experiment with AI. But what happens when you are a company like Google or Meta or Microsoft? What happens when you are operating at a planetary scale? You know exactly what kind of computations you need to run billions of times a day for your specific models. You don't need a Swiss Army knife. You need a custom forged katana. You need a chip that is designed to do one thing perfectly with the absolute maximum performance and the absolute minimum power consumption. That is an ASIC. Broadcom is the undisputed king of designing and manufacturing these high-end custom AI accelerators. Their two biggest customers in this space, Google for their Tensor Processing Unit or TPU program, and Meta for their own internal custom AI chips. While the entire world is in a street fight to get a finite allocation of Nvidia's GPUs, the hyperscalers themselves are also building their own massive fleets of custom silicon. Why? To reduce their reliance on a single supplier in Nvidia and to create chips that are perfectly optimized for their workloads, driving down costs and increasing performance. And who is their indispensable partner in designing this custom silicon? Broadcom. This AI networking and custom silicon business is not a side project. It is a beast. Broadcom's CEO, Hock Tan, has been explicitly clear that this is their fastest growing and most important segment. This business is already doing over $10 billion in revenue per year, and it's growing at percentages that rival Nvidia's just from a smaller base. But that's not even the whole story. AI data centers don't just need compute, they need networking. The amount of data zipping between these thousands of GPUs is unfathomable. You need incredibly high speed, low latency networking. Broadcom is the dominant force here with its Tomahawk and Jericho families of Ethernet switches. They own the high-speed data center switching market. You cannot build a modern AI cluster without Broadcom's networking hardware. AI is a networking problem, and Broadcom sells the best solutions. So here is the AI plus thesis for Broadcom. You are buying our hyper growth custom AI chip business. The ASIC story that is a direct non-Nvidia play on the compute build-out. The dominant AI networking hardware business. The switching story that is an essential picks and shovels component, the massive, stable, cash cow software business. The VMware story that is now being transitioned to a subscription model and will fund R&D and capital returns for years. And on top of all of that, the stock pays a significant growing dividend. This isn't a 100 times lottery ticket. This is a compound, your wealth blue chip. It's the grown-up way to invest in the AI hardware boom, combining hypergrowth with value, software, and a dividend. That's why I'm adding to it. If you're finding this kind of hidden in plain sight analysis useful, do me a quick favor and hit that like button. It takes 1 second, but it tells the YouTube algorithm that we're delivering real value, and it helps get this information out to more people who are trying to navigate this market. I'd really appreciate it. Okay, my second pick moves us up the stack from the silicon to the software. Specifically, we're going to the heart of the enterprise, to the platform of platforms for digital workflows. I am talking about ServiceNow Ticker now. If you have ever worked in a large corporation, you have almost certainly used ServiceNow, even if you didn't know it. For decades, they have been the undisputed heavyweight champion of its service management. It's that portal you use to file a help desk ticket when your laptop is broken. That's probably ServiceNow, but they didn't stop at it. They spent the last decade taking that same powerful workflow engine and expanding it into every department. HR onboarding and payroll, that's a workflow. Customer service complaints, that's a workflow. Legal contract approvals, procurement requests, all workflows. ServiceNow has become the central nervous system for how a modern business operates. They are the platform of platforms that stitches all the other disparate software together. Now, what happens when you pour the most powerful generative AI on the planet into that central nervous system? It's not just a new feature, it's an explosion of productivity. This is the key. ServiceNow's entire business is built on structured data about how a company actually works. They have the data on who requests what, who approves what tasks take the longest, and which problems are all related. This is the absolute perfect training ground for AI. Think about the practical applications. An employee has a problem. Instead of a human help desk agent manually reading the ticket, a ServiceNow AI agent intercepts it. He understands the intent of the request, references it with a knowledge base, and either resolves it instantly with an automated action or routes it to the exact right human specialist with a pre-written summary of the problem and the steps already taken. A new manager needs to onboard a new hire. Instead of a 50-item checklist, they type one natural language prompt. Onboard our new marketing manager, Jane Doe, starting Monday. The ServiceNow AI takes over. It generates a 90-day plan, provisions the laptop from it, grants access to the right software from security, and schedules the intro meetings with HR all automatically. This is not a hypothetical. This is their Now platform and their new Pro Plus SKU stock keeping unit. They have built co-pilots and AI agents directly into every single workflow they sell, and the results are staggering. Customers are reporting massive, tangible ROI and ServiceNow. They are seeing a massive upsell opportunity. Why is this a better AI investment than some new flashy app? Because of the moat. You can't ask a generic ChatGPT to approve a vacation request or provision a new server for the engineering team. It doesn't have the context. It doesn't have the data. It doesn't have the permissions. It isn't tied into the company's systems of record. ServiceNow has all of it. This is proprietary AI running on proprietary data to automate proprietary workflows. That is a fortress. The AI plus here is the platform itself. Look, this stock is not cheap. Quality rarely is. But you are buying a company that was already a best-in-class software as a service business, growing at a consistent 20 to 25% clip with sticky, high-margin, recurring subscription revenue and a customer base that is fanatically loyal. The AI integration is the accelerator. It is not a new business they are trying to build. It is a multiplier on their existing dominant business. They have given their entire sales force a golden ticket to go back to every single customer they have and say, the platform you love is now 10 times smarter. You need to upgrade. While everyone is chasing the latest consumer facing AI toy, ServiceNow is quietly embedding AI into the boring, essential, non-negotiable plumbing of every Fortune 500 company on earth. This is how tangible enterprise value is created, and in my opinion, it's one of the most durable AI compounders you can own for the next decade. My third and final pick is in a sector that is non-negotiable, recession-proof, and is being fundamentally reshaped by AI on both sides of the battle, cybersecurity. The company is CrowdStrike, ticker CRWD. CrowdStrike is a leader in modern endpoint security. In simple terms, they protect the endpoints, your laptop, your phone, the servers in the data center from getting hacked. Their massive innovation was being cloud native. The old way of doing cybersecurity was with companies like McAfee or Symantec. They would put a heavy piece of software on your computer and download a signature file every day of all the known viruses. This was slow, clumsy, and couldn't stop new zero-day attacks. CrowdStrike's model is different. They put a tiny, lightweight Falcon agent on the endpoint. This agent doesn't do much analysis itself. Instead, it streams telemetry data, billions of data points to CrowdStrike's massive brain in the cloud. It is this brain that does the analysis in real time. And here is the AI thesis. That massive brain is the AI story. It's called the threat graph. From day one, CrowdStrike was an AI and data company that just happened to sell cybersecurity. The threat graph ingests trillions of signals per week from the millions of endpoints it protects across its entire global customer base. It uses machine learning to identify patterns of behavior, detect brand new threats that have never been seen before, and stop breaches before they can do damage. This is a classic, powerful data network effect. More customers means more data. More data means a smarter AI. A smarter AI means better protection. Better protection attracts more customers. This flywheel has been spinning for years, and it's what has allowed them to take so much market share. But now it's gone to a new level with the advent of generative AI. They have launched Charlotte AI. This is essentially a generative AI security analyst. Think about a typical security operations center or SOC. You have hundreds of analysts, often overworked and burning out, staring at thousands of alerts on a screen, trying to figure out which ones are real threats. It's a needle in a haystack problem. With Charlotte AI, an analyst can now just ask in plain English, what is the status of the attempted breach on server 42? Show me the blast radius of that attack. What other devices did that malware touch? Draft an incident report for my CISO and include mitigation steps. The AI does the grunt work, the investigation and the reporting in seconds, not hours. This is a massive force multiplier for understaffed security teams. It's a game changer for the industry. And this brings us to the AI plus thesis for CrowdStrike. It's twofold. First, AI is not just a feature for CrowdStrike, it is the foundation of their entire architecture. They were AI native from the beginning. Second, AI is also the problem they are solving. The bad guys, hackers, nation-state actors are using AI now too. They are using AI to create perfect customized phishing emails. They are using AI to write new malware that can change its own code to evade detection. You cannot fight AI-driven attacks with human, only teams and legacy rules-based software. It's like bringing a knife to a gunfight. You must fight AI with a better AI. CrowdStrike is the better AI as the world becomes more complex and the digital threats become more sophisticated. AI native security will shift from a nice to have to an existential necessity for every company. Like ServiceNow, this is a beautiful high growth, high margin subscription based business. They have a best in-class land and expand model. They sell a customer one module like basic endpoint protection and then systematically upsell them into their other 20 plus modules, covering things like identity protection, cloud security, and log management. Their dollar-based net retention is consistently over 120%, which means, on average, their existing customers spend 20% more with them year after year. It's an incredibly sticky and profitable model. By the way, if you're enjoying this deep dive format and haven't already, please make sure you subscribe to the channel. I'm going to be doing a dedicated video on just the AI in cybersecurity sector next month, comparing players like CrowdStrike and Palantir directly, and you won't want to miss it. So to recap CrowdStrike, it's a bet that in the new AI-driven world, digital defense is paramount. CrowdStrike is the leader in this new paradigm, and the AI arms race is its ultimate non-cyclical tailwind. So there you have it, my top 3 AI street ox. I'm buying right now, even over the giants. We have Broadcom, Avgo, the hidden, in-plane, site AI hardware king, giving us exposure to custom chips, high-speed networking, and a growing dividend. We have ServiceNow now, the enterprise workflow champion, using AI not as a feature, but as a fundamental business accelerator to drive a massive new productivity and upsell cycle. And we have CrowdStrike CRWD, the AI native cybersecurity platform that is both the shield and the sword in the new digital arms race, a non-negotiable spend for modern business. Notice the theme, none of these are AI lottery tickets. They are all dominant, best, in-class, cash, flowing companies where AI is not the only story, but the catalyst that redefines their growth trajectory for the next decade. This, in my view, is a much more robust and sustainable way to invest in this revolution than just chasing the most hyped names. But now, I want to hear from you. What AI stocks are you buying? What are the hidden gems that you think I've missed? What's your take on the ASIC versus GPU debate or the future of AI in enterprise software? Let me know your thoughts down in the comment section below. I read every single one, and it's how we all learn. As always, thank you so much for your time and attention. This is not financial advice, just my personal research and opinion. Always do your own due diligence. Until next time,